Wall Street closes lower as trading resumes after the extended Labor Day weekend. Higher crude prices and fresh inflation concerns and surging treasury yields also weigh on stocks. Stocks in the Asia-Pacific opened largely lower on a weak handover from Wall Street. The GIFT Nifty is implying a flat start for the Indian market. Russia and Saudi Arabia extend production cuts for a longer than expected period, now until the end of the year. Brent crude hits a 10-month high, surging above the $90 a barrel mark. India is advancing the interests of the developing world at G20, says Prime Minister Modi in an exclusive interview to Money Control ahead of the summit this weekend. As the democratization of the G20 presidency is India's investment in capacity building of the people, especially the youth. RBI Governor Shaktikanta Das says vegetable price inflation will not last more than 2 months, as the central bank remains watchful of risk from recurring food price shocks. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have for you this morning. There's a lot to track that we've got, both in terms of the global cues as well as for our own markets. So let's get down to it and talk about the global handover, because that was quite weak. The US opening after that extended weekend, and we saw, sharp cuts come through there. There was a big move in the money market as well. And on the back of that, you have most of the Asian markets which are opening with cuts. Some of them have recovered a bit, but what's looking the worst this morning is the Seng market. So that is down over 150 points right now. So almost 0.9% gone over there. You have the Taiwanese market, which has just recovered a little bit. So now that's trading with just gains of around 3 points. So, that's very flat as well. In terms of other markets which are seeing sharp cuts, you have the Shanghai and Kospi both seeing around 0.5% shaved off right at the start of the trading session. So across the board, it is looking more weak than, positive for the Asian markets. Some markets which are managing to hold in the green, the Taiwan index, like I mentioned, Nikkei is doing relatively better. So that's around 0.3% higher right now as well. And the Straits also just around 0.25% in the green. So that's what's happening across Asia. The GIFT Nifty is up for you. It's implying a very, very flat start for our own markets, just around 8 points higher over there. And we have seen a pullback in this as well. Till around some time ago, it was at least 25 points in the green. But that's what's happening in the Asian markets. Let's talk about the US as well, because like I mentioned, stocks fell on Tuesday. This was weighed down by a jump in crude prices. Like I mentioned, we crossed $90 a barrel, as well as a surge in treasury yield. So that is the other important cue to track. Now the Dow fell over 190 points. The S&P 500 was also down around 0.4%, and the Nasdaq, like you can see, was pretty flat at the end of the trading session. Now, the street assessed the inflation risk because Brent hit that 10-month high overnight, crossing that $90 mark. Meanwhile, we also got a comment from Goldman Sachs which said that there is lesser probability of the US entering a recession in the next 12 months. So it sees the odds of such an event at 15%, and what they had earlier forecast was around a 20% probability. So that's important from the US markets. But on that note, let me also bring you some important opinion. This comes in from Fed Governor Christopher Waller, who spoke with CNBC Steve Leisman about rate hikes, inflation, as well as, of course, the recession risk. Listen in.
That was a hell of a good week of data we got last week. And the key thing out of it is it's going to allow us to proceed carefully, as Chair Powell said at Jackson Hole. There's nothing that is saying we need to do anything imminent anytime soon, so we can just sit there, wait for the data, see if things continue. The biggest thing is just inflation. We got 2 good reports in a row. Can wait and see what a third one looks like and see whether this low inflation is a trend or it was just an outlier or a fluke. Well, the way the data is coming in, it's looking pretty good, but recessions often are caused by shocks that just come out of nowhere and hit the economy. So that can always happen, and that's why they're shocks. We can't really predict them. But the way the data is coming in right now, it's looking pretty good. I mean, I don't think one more hike would necessarily throw the economy into a recession if we did feel we needed to do one.
All right, that is the word coming in from Christopher Waller, saying that, the data has been good last week and he doesn't see the need for the Fed to do anything imminent. That's important to track. But let's now talk about all of the domestic cues that you should track as we get into this trading session. We have Ekta, Mangalam and Survi here with the trade setup this morning. Guys, a very good morning to all of you. Ekta, let me come to you first. I know that the global handover doesn't look very positive, especially with yields and, crude prices surging. But for our own markets, we saw quite a good close yesterday.
Hi Pavitra, morning. Well, yes, we have been, and this is despite FII net selling in the equity market as well. So yesterday, the markets did close positive for the third consecutive session. We had the mid caps, which hit a record high. The market seemed to be buoyed by sentiment around India hosting the G20, the services PMI data, which came in at 60.1. It was lower on a month-on-month basis, but nonetheless still strong. In fact, the services PMI has been above 50 for the 25th straight month. What is worrisome is Brent crude prices, which have now hit $90 per barrel, so it's a 10-month high. Saudi Arabia and Russia have extended their voluntary supply cuts. We have treasury yields, which weighed on the global markets as well. So the US markets closed lower overnight. We have Asia, which is mixed, and the gift Nifty, which is indicating a bit of a flat start. Like I mentioned, FIIs net sold, so they net sold around 1,725 crores overnight, and DIIs that net bought around 1,077 crores in our market. Just watch out for what's taking place in the entire commodity space in general, because now that we have Brent crude at 10-month highs, we also have sugar prices, which are the highest that we've seen in 6 years. So that is something that the street will probably monitor, and in terms of any kind of ripple effect in terms of what we could see on inflation figures.
All right, Ekta, thanks a lot for taking us through all of those cues. So, of course, stocks will be important on the back of this as well, on the back of Brent rising above $90 a barrel, sugar also moving. So, Surbi is here with the entire list of stocks. Surbi, take us through everything that you're tracking.
Hi, morning. So, first one on my list is Vedanta. The Zambian government has agreed to return ownership of the Konkola copper mines to Vedanta Resources, so that will be on our radar. NBCC, the company gets project worth 2,000 crores from the Kerala State Housing Board. Power Grid, the company wins the transmission system project in Rajasthan. Tata Power, Tata Motors Limited partners with Tata Power Renewable Energy to develop a solar power project in the Pune manufacturing facility. ONGC and Oil India will be in focus. As you all have been saying, the Brent oil has rallied to $90 a barrel. So that will be also on our radar. And lastly, Geo Financial Services, as the company is going to be excluded from the NSE indices effective September 7th. So we'll keep an eye out on that as well.
All right, Surbi, thanks a lot for that entire list of stocks. Let's talk about the future side of things as well. Mangalam is here to take us through all of the cues. Mangalam, we closed pretty much, near the day's high. So take us through everything we should watch today.
Yes, we did. And the interesting thing, however, is that the range itself was so small yesterday. If you just take a look at the Nifty, yes, we did manage to close higher, but the low was 19,525, the high was 19,587, telling you all of the Nifty's move yesterday were confined within that 60-point band itself. What's putting a lid on the way the markets are moving right now, at least the frontline indices, is one that the FIs are selling. They sold for the second straight session, 1,700 crore worth sale. This compares with the DII buying about 1,000 odd crores. And, the weakness that we're seeing on both the Nifty Bank as well as the Nifty Financial Services. Yesterday, the FIs did buy about 269 crores in index futures. They're covering some of their short positions, and the net long stay at around 52% itself. In index options, any sort of upside in the market, they're looking to buy through calls, and that's why they bought around 2.6 lakh calls. However, they're also protecting themselves on the downside by buying about 2 lakh puts. On the way down, yesterday, the Nifty Financial Services saw some unwinding of short puts. On the way up, we did see some writing in calls as well. What were those active calls? 19,600 calls. Because the Nifty Bank is underperforming, the Nifty is unable to cross past this congestion zone to 19,600 call for a premium of 40 rupees, telling you that 19,600 to 650 could face some resistance. The good part, however, is that the support has moved higher, closer to 19,450, where the 20 and the 50-day moving average on the Nifty are as well. So 19,500 put writers extremely active. What do we have to watch out for? The Nifty Bank going ahead and crossing that 50-day moving average. It's proving to be a bit of a serious congestion. So once we do cross past that, only then can we say that the Nifty is about to break out. But it's all about individual stocks. The mid-cap index yesterday crossed that 40,000 mark. A lot of stocks entering, exiting F&O bands. So day 4 of the series, Delta Corp has now entered the F&O band. A lot of short covering is what we saw on Jubilant Foodworks. The stock ended 6% higher. And some long positions added on ABFRL as well, Aditya Birla Fashion, that is. This is the right stock. But the Aditya Birla Fashion stock saw a lot of long positions being added.
All right, Mangalam, thanks a lot for taking us through all of those cues from the future space as well. With that, it is time for a short break. But when we return, we are going to get you the highlights from moneycontrol.com's exclusive conversation with Prime Minister Narendra Modi ahead of the G20 summit. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Now, India is advancing the interests of the developing world at G20, says Prime Minister Narendra Modi in an exclusive interview with our sister publication Money Control. Shireen is standing by at the wall to detail the highlights of the interview. Shireen.
A wide-ranging interview with Network 18's Rahul Joshi. The Prime Minister has spoken about the upcoming G20 summit this weekend. Of course, about the summit, the economy and a lot more. The Prime Minister said, and I quote, India has also been advancing the interests of the developing world, including the interests of nations not represented in the G20, such as the countries of the African Union. Further, perhaps for the first time in the history of the G20, the troika is with the developing world. That's Indonesia, India and Brazil. This troika can amplify the voice of the developing world at a crucial time when there are increased tensions due to global geopolitical tensions. End of quote. Speaking about India's G20 presidency, the Prime Minister said, and I quote again, when we laid out our agenda for the G20, it was welcomed universally because everyone knew that we would bring our proactive and positive approach to help find solutions for global issues. When global leaders met, they are filled with a sense of optimism about India due to the efforts of 140 crore Indians across various sectors. They're also convinced that India has a lot to offer and must play a larger role in shaping the global future. This has also been witnessed in their support for our work through the G20 platform. The Prime Minister also highlighting the impact of the G20 presidency on the public as well as the economy. He said, and I quote, our democratization of the G20 presidency is our investment in the capacity building of the people, especially the youth of various cities across the country.
All right, a lot of important takeaways from that interview. In fact, you can read the entire interview with the Prime Minister on moneycontrol.com. So that is important. But, from this, we also spoke to corporate leaders Shubhra Panna and Anish Shah from the Federation of Indian Chambers of Commerce and Industry, that's FICCI, on the business opportunities that emerged from the G20 summit this weekend. So listen into what they had to say.
The bilateral discussions which will take place are also important. Again, just to reiterate what Anish said, this is India's coming of age. This is a clear recognition of India's new standing in the world order, and the fact that whether it is economically, whether it is politically, whether it is the ability to straddle diverse partnerships without getting boxed into one grouping or the other, I think all of this speaks well for India's sagacity and its diplomatic prowess.
India has shown remarkable leadership on the world stage. And this is something that G20 only helps take further. What it means for us in business is that India has a much greater voice. Indian companies are perceived to be much stronger as we go out globally as well. And as India is also uniquely positioned to be able to help reduce some of the tensions by negotiating or by partnering with various countries around the world, it potentially augurs well for supply chains also. So we see multiple benefits, and we think there's a lot that needs to be done on the world stage, just given what we've seen over the last 2 or 3 years. And it's good to see India at the forefront.
All right, those are some big voices coming in on the kind of business opportunities that can emerge from the G20 summit this weekend. But with that, it is time for a short break. On the other side, we're going to talk about that huge rally in oil prices. We're above $90 a barrel. We'll tell you why when we come back. Welcome back. Here's a word from RBI Governor Shaktikanta Das now, who says that vegetable price inflation will not last more than 2 months. Speaking in Delhi, he reiterated that the central bank remains watchful of the risk from recurring food price shocks as well. So listen in to what he had to tell us.
Our assessment for the current year is that this vegetable price inflation would not last more than 2.5 months. And in fact, as you would be knowing, or let me share with you, the prices of most of the vegetables have started coming down. Tomato prices have really come down very steeply and are expected to go down further. So if there is a sudden spike in vegetable prices and we see that it is likely to moderate, it is likely to go down in 2 months, we don't change our monetary policy.
All right, very important word coming in from the RBI governor over there. But let's also talk about the crude prices now, because that has seen a non-stop rally. So Manisha joins us with the update. Manisha, we've not seen this $90 a barrel kind of mark for a very long time now.
Oh, well, absolutely. No, you haven't seen that in last 10 months, because this is a 10-month high prices that we are seeing in case of the crude oil prices. The other thing is that the crude is now trading in backwardation. That means that crude is more expensive right now than what it is in 3 months later. So there is this some immediate tightness that we have seen into the prices. The strength has come in because Saudi Arabia has now extended the 1 million barrel per day cut all the way up to the end of December. Earlier, it was estimated that they might extend it for the month of October alone. And that's exactly what Russia also has done. They have also extended their export curbs of 300,000 barrels per day until December end. So now when you look at the Saudi Arabian production, that is at 9 million barrels per day for every month for the rest of 2023. So even with the Indian demand declining, China demand not being so strong, with these kind of cuts until the end of this year, you are definitely looking at a tightness for the rest of 2023. And most banks and brokerages have now upped their crude forecast to almost $95 and some to even $100 a barrel for the end of December now in 2023.
All right, so we could see a further rise as well. In fact, let's also listen to what analysts are making of this run-up in oil prices and the demand picture going forward. And like Manisha mentioned, a lot of them are factoring in higher prices, at least in the short term. So hear them out.
I see perhaps we pop above 90 in the short term, but I think we will see demand start to taper off as we head into the winter months. And that will also add some pressure on OPEC what to do next.
I think the main reasons, there are two main reasons. I think we've got OPEC Plus agreeing to maintain their output cuts. We've also got Russia there also sort of saying that, okay, well, they're going to do less exports as well. So we have that supply tightness. Also ahead of that, we're coming into the hurricane season. And I think if you put in some restrictions there, then it is an issue. Also, you've got inventory draws in the States, which have been a bit larger than normal. So all this is creating this supply tightness that is just keeping the market bid. So the Chinese, depending on how hard and fast they go on stimulus, I think was also a major factor in seeing crude oil prices break through US 90. And I think in the next quarter can often head up to 100 plus.
All right, 100 plus as well. That is the word coming in from some analysts on where the crude prices could be headed. But with that, we're going to wind down on this edition of Power Breakfast with the news that most Asian markets are in the red right now, barring just the Nikkei and Straits. The implied open for our own markets is absolutely flat, just around 5 points in the green right now. Thanks for tuning in. We have Bazaar Morning Call after this short break.